All right, let's go to Zimmer Biomet Holdings. And this is one, I'll talk more about it in a minute here. We'll give you some numbers, but I recognize this company from years ago when it was just Zimmer. And I don't know if you have the data on that. I know you always have some good background data on stuff. So let's look at the numbers first to see if it's worth looking at a buy here. They are in the medical device services industry. Only 3.6% short on the float. That's a positive. 94% institutional owned. And we do see a PE ratio that is 23.1, which sounds a little bit high, but the industry is at 55. Price of sales 2.7 versus 3.9. Price to book value 1.6 versus 3.8. Price to cash flow is 13.9 versus 26.5. And again, these are valuation ratios. The lower the number, the better. They do have a PEG ratio of 2.3 versus 7.9. So that's another positive. Now, over the past year, their earnings are down 3.9%. And if I was going to invest in this company, I want to know why. What happened? Because the whole industry was up 25%. Maybe this is creating a buying opportunity. Their sales were only up 3%, industry up 12.6%. Are they lagging something? What's going on here? Also, their 5-year growth rate on the earnings is only 5.6%, which is not bad, but the industry is at 8.2%. They do pay a 0.9% dividend, use 22% of the earnings to pay that out. Taking a look at the balance sheet here, they got a current ratio of 1.9 versus 2.1. That's good. Don't see any problem with the debt. It's 0.5, same as the industry. Net profit margin, looking very good, 11.8. That's above the industry at 9.1. And then return on equity, not sure why this is low. It's 7.3 versus 18. We generally like to invest in companies where they have a return on equity of around 15%. Chase, what do you got?
Yeah, so current price here for, again, Zimmer Biomet Holdings is $102.38. 52-week range. The low here is $93.10 and the high is $122.25. To give you that information on Zimmer to Zimmer Biomet,
Yes. Yeah.
It did actually happen in June 2015. So it's kind of interesting. Zimmer did acquire Biomet for cash and equity in a deal that was valued at approximately $14 billion. So that's when they changed to Zimmer Biomet Holdings. But I say it's interesting because now that's about 10 years ago.
Yeah.
And generally, we don't like to see acquisitions of this size. It's hard to kind of integrate those companies, and generally, I'm just going to say it's a challenge. And I point this out because the 10-year return on Zimmer Biomet, negative 9.9%. So since they've kind of merged here, it hasn't been good for shareholders of what I'm going to say with Zimmer pre-Zimmer Biomet.
And I remember I liked Zimmer before because they do like knee replacements, hip replacements. I think they actually make the artificial knee, I guess I'll call it. But it was always very expensive, and that's why I never bought it. And I looked at it, again, over 10 years ago. But it looks like something has changed. I'm not sure what Biomet brought to the table.
Yeah, I mean, I was kind of looking at some of the products. You already mentioned the knee and hip products. They also have sports medicine, foot and ankle, extremities, trauma products. Now, there's interesting face and skull reconstruction products.
Face reconstruction?
Face and skull. Yeah, so I guess
skull.
you break your skull and
Okay.
maybe reconstruct it somehow.
I guess when they like their face, they get it reconstructed too.
Maybe that too. I'm not sure exactly, but then they also have something that can fixate and stabilize the bones of the chest to facilitate healing or reconstruction after open heart surgery or deformities of the chest. It then offers technology and data, bone cement, and surgical products. I mean, I think this is an interesting company, and I was blown away by this. It was actually founded, Zimmer at the very least was founded in 1927. I mean, so this has been around for a long time, apparently.
I wonder if back then if they did like cast and stuff like that, because obviously they did not have any replacements back then. So
or something to stabilize your open heart surgery.
Right.
I mean,
and I did hear you mention that they do have like some pharmaceuticals. It sounded like, I think you said, or some.
Not pharmaceuticals, but bone cement was.
Bone cement.
So they're more focused on the surgery.
Something with sports. I heard something with
sports medicine.
Sports medicine.
So likely like a foot and ankle. So they probably work with athletes that maybe need to repair that knee after they tear their ACL or something. I'm speculating, but it seems to be pretty broad reaching in terms of the products that they offer.
And you know why this is so important? Because pickleball is really very popular. And older people like myself play it, and they don't realize it. Their brain thinks they're young. Their body's not. And there's a lot of knee injuries and ankle injuries. People that are older playing pickleball,
This
I
could
like
be great.
This could be great.
Yeah, and we know we have an aging population. I haven't given the numbers yet, so let me get to that. But we go out to December 2026. I see estimated earnings per share here, $8.83. It gives us a target sell price of $146.58. Again, above that current price of $102.38. Trades at about 11 and a half times those future earnings. I mean, I think there's a lot to like here, and I'll give people a little secret. This is something that we actually read about recently, and I'm like, this looks kind of interesting. Yeah. I mean, it appears to have some good potential, and I'll tell you, now with the S&P 500, it's only down like 3% year to date. The NASDAQ, I think, is down 7%. Completely recovered the losses that we saw from that April 2nd, concern over the tariffs and everything. I think the markets are once again expensive. I think something like this in healthcare, I'm kind of more intrigued by something of this nature. I'm quite high on it, I would say.
And what we like to do is invest in companies. We don't trade stocks. Here's a great company, a great business we can get into. I do see that for the last 90 days, their earnings estimates did fall by 4%. I'm wondering if the products that they use, because they probably assemble them here, or maybe they assemble them in China. I mean,
that's a great point.
Yeah, because maybe that's why they're falling, because the tariffs could hurt their products. So if you're going to buy this company, which we will be looking at closer, you want to look to see, okay, how are these products made? More about the products, because they've got a long line of products. But I think, and again, you may buy, what was the price? Like
146.
146. I mean, I wouldn't have a problem if we bought it at 146 and it fell to 130.
Oh, I'm sorry. That was the sell price. The current price is around 102.
Oh, 102. So what I'm saying is I wouldn't care if I bought it at 102. I wouldn't be thrilled about it. It would drop down to 90, because I think this is a business that, again, is growing, because you talk about our aging population. People, again, do have bad knees, bad ankles, bad hips. So many things this company does. This, I think, is a great long-term business for a population that is aging.
Yeah, and I would just kind of add one more potential pitfall to look at, and that's competition. I mean, you kind of brought up the growth rates are a little bit concerning, and I look at going forward, I mean, earnings growth is estimated to still be, I'm going to say, high single digits over the next couple of years. But, I mean, is there competition, and that's why the earnings and sales haven't been growing as much? I mean, that could be something of issue. Another thing we know about is a potential cut in government spending here on Medicare, Medicaid. If there are lower reimbursement rates, is that going to hurt, these, I'm going to say, elective surgeries that people can kind of opt for? That is another area where maybe this would hurt a Zimmer Biomet. But overall, I like it. There's just kind of some questions I still have.
Right. And I looked at the cash flow. I mean, it's over the last 12 months, about $1.5 billion. That's very important with the company, because with competition, you again, you're going to have to, cut your prices sometimes and compete well. I don't know the other companies in this industry. I've just known Zimmer for probably 12 years. I think probably is a good time frame. But I like the business. But again, you got to check the other numbers to make sure it's good. And I was going to look at the free cash flow number. I think we have. Oh, that's the wrong thing I clicked on here. Let me see if I can find it real quick. Where's the free cash flow number? I always hate when I can't do it quickly.
Well,
1.1 billion.
It's a business that I don't think you're going to see go bankrupt. I think it's very well managed.
Yeah.
I don't think, again, it's going to go from 100 to 200 next year. But I think it is. I think it's just a good, safe company that I think you can do well on.
Yeah, and I think the 5-year earnings per share growth rate is 6%, kind of on the low side.
Well, and let's even say it grows at 6%. You get a 6% growth on earnings. Let's say it maintains its multiple, which is very low, plus a 1% dividend. I mean, you make 7% per year. Now you add multiple expansion, because I think it's trading at a very low multiple. That's where you start to get now a 8, 9, 10% growth on this stock, because the multiple is so low. And that's why we like value investing, is that opportunity for multiple expansion along with mid to high single digit growth in those earnings.
And they did that acquisition 10 years ago. So the debt, again, 0.5 debt to equity. So that's not a problem. Now, hopefully they don't acquire somebody else as a big one. That would be an issue, but no talk of that. And that's why you do the research.
Yep.
To say, is there anything else on there? Let's know what the management. Did they just do their conference call recently?
That is one thing, actually, I messed up on when we picked these companies that time. They report next week. So I would not buy this stock until they report to get a better input of what's going on.
Yeah, because I can tell you what's going on and so forth. So we'll be listening to that conference call. Yep. So,